Hello, good morning, good afternoon, good evening, depending on where you are on the earth. Here is Jean-Pierre Muire from Ultimate Traders Company Limited. Today, we are going to run the new episode of our Forex trading courses, and we have a very interesting course, one of the interesting reasons we ever need in this career of Forex trading. Let's meet after the intro. Welcome to the new lesson of our Forex trading courses. But before we go to the new course of today, let's start with a recap of what we've learned in the previous lessons. In the previous lesson, we've learned about trading psychology. We've seen that trading psychology is the mental state of a trader and her emotion during a trading period. We've seen that this trading psychology is a very important issue in trading a career because it is one of the things which define the losing and the winning traders. We have seen that trading psychology is what makes the difference between winning and losing traders, because more than 95% of retail traders loses money in forex trading, not because that they do not have the right strategy or the risk management, but the poor trading psychology. We have seen the causes of bad trading psychology, and the major ones are the bad expectations, lack of a trading plan, lack of trading strategy, poor risk management. And we have seen how to fix this problem, where we mentioned that having good trading psychology will come from the beliefs or the confidence you have in yourself and what you are doing, and the capability to reduce or to eliminate the pains and fear. And to do this through two things, we have seen that you need to have a trading strategy which has been proven to have an edge over the market, and it must be tested over a large number to make sure that this strategy could have been made money in the last, and this gives you the confidence of what you are doing. In addition to that, to reduce the pain or the fear of missing your money, you need to have a proper risk management where we recommend to do not risk more than 1 to 3% of your total capital. Especially if you are a newbie or a new trader, we recommend to risk at least 1% of your total capital, because the experience of trading is still small, and as you become professional, you can increase your risk appetite to 2% up to 3%, but not more. If you missed anything within this lesson, you can go back to the previous lesson and run it, or you can even log on to our YouTube channel, to our website, in order to get more information regarding the trading psychology. Without delaying, let's go to the course of today, the course which is very interesting, the course which you will need during your entire career of forex trading. So as you may see it from your screen, we are going to run today what we call PIP. PIP, we also call it a percentage in points or price interest point. And PIP is the smallest amount which a currency account can change. You see, if we are writing a currency pair, for example, Euro USD, equals to 1.0 0987. I hope you all remember that this first currency we call it base currency, and the second currency we call it quote currency, and this value we call it quote. It is not possible, and it is very, you will never see the Euro USD, the quote of this pair changing from 1 to 3 point something. So it changes a bit very small to these numbers behind the dot point. So this tiny change of the currency code, it is what we call pip. And it is very, very important because our profit and the loss will depend on the value of these pips. Pip is the fourth decimal of the quote price. It is what we call pip. Let's take an example with Euro USD, which is equal to 1.0733. This fourth number, this one, it is what we call pip. This fourth number here, it is what we call pip. It is the smallest change in price. In other words, 1 pip equals to 1 pip equals to 1 over 10,000. You see that it is very, very, very small number, and that is what we call price interest point in Forex. Even though we become to say that the pip is the fourth decimal of quote price, there are some exceptions, especially for Japanese pairs. So all the pairs which contains Japan yen as quote currency or base currency, the pip, it is the second decimal of the quote price. An example is, for example, if you take a GBP, Japan yen, or British pound with Japan yen, which is equal to 163.45, this second decimal, it is what is the pip. It is not only for GBPY, all the pairs which contain Japan yen, we will calculate the pip value from the second decimal of the quote price. Let's see what we call pipette. There are some brokers which quote the pairs beyond the 4 decimals or beyond the 2 decimals for Japanese pairs. So the numbers after the 4th decimal, we call them fractional pips, or we call also points. And this fractional pip, it is 1/10 of the pip value. It is 1 over 10 of pip. And this value, 1/10 of the pip, we call it pipette, or simply fractional pips or point. Let's see an example for how we read a point. So, for example, if we quote Euro USD, you see that the 4th decimal, it is 0, and we have the 5th decimal here, which is 3. And in this case, 3, it is what we call pipette, or pip, fractional pips or points. For Japanese yen, fractional pips will be the 3rd decimal of the quote price currency. So we hope you understand what is pip and pipette and how to read them. Let's take you to the professional reading of pips. Let's make an example of any particular currency pair which has a quote equals to 1.734 14. This is our code for any particular pair. What we need here is to see how we can read this in terms of pips. So the fifth decimal, this one, as we have said, this is what we call fractional pips, or it is, and we have seen that it is equal to 1/10 of pips. So it is 4/10, this is equal to 0.4 pips. So you can simply say 0.4 pips, or simply 4 fractional pips. This fourth decimal, it is what we call pip. So this is 1 pip. The next, this third decimal, it is 40 pips, because we are now in the tenths. So it is 40 pips. This one, it is 300 pips, 7,000 pips, and this is 10,000 pips. For Japanese pairs, for most brokers, they will limit the quote up to this point. In that case, this will be for 0.4 pips, and this will be 30 pips, and this will be 700 pips, and this will be 1,000 pips. So this is how we read the car price quotes in a professional way, and I hope you understood it, because we'll be using these readings in our daily activities or in our daily business of forex trading. So if you missed anything about it, please, we encourage you to review, to rewatch this video, or you can even go to our website in order to get to understand more what is a pip and how to read the pips. I hope you enjoyed this video, and let's stop here. But don't forget to subscribe to our YouTube channel so that we will not miss the next course. Don't forget to hit the like button and to share this video to your friends, so that they should also know this good news of forex trading. For more details, you can visit our website www.ultimatetraders.rw. Ciao.